Okay, welcome back. Thank you very much for staying with us. Investment professionals say there's a need to engage thoroughly to thrash out the notion of the possible investigation of the reintroduction of prescribed assets. They say this is because of the negative impact it would have on asset prices and investor returns. Lack of investment, constrained fiscal space, and high levels of unemployment have some believing that prescription in investment is a quick way to force investment growth. Joining us is Principal Investment Consultant Janinia Slwasky from Alexander Forbes. Welcome to our program.
Thank you very much.
Right, so many people are really concerned about how this notion has been really sending jitters to the market. Do you believe that it's a bad idea?
We believe it's a very bad idea. Maybe just to give an overview of what it actually means. So essentially, we've had it before in this country where in the 1950s there was a requirement that investors like pension funds take some of its money and actually go and invest into prescribed assets, what they described it as. So essentially, because you're forced to invest into something, you tend to get much lower returns. And there's a lot of evidence of that. During the 1950s, the 1960s, investors actually earned less on that money. There was an opportunity cost versus where else they could have invested. So the conversation started again now because it's in the ANC election manifesto as a suggestion. But it's very much focused on saying they want investors like pension funds to invest into developmental assets. Mm-hmm. But the issue is don't do it via prescription. Prescription's bad. It's forcing you to invest into something you don't want to. We would want the country to be very much focused on creating jobs through developmental investments. But let's find ways to do that in a positive way.
Do you feel actually in the country that this is a neglected area?
Yes. Essentially, we always say it's not a lack of assets, it's a lack of opportunities. Everyone looks at the pension fund industry and sees a lot of assets. Can we have a bit of it? But the issue is if there were great opportunities, the assets would flow. International investors would come in and put money where it would really make a difference to communities, the building of infrastructure and so on. So it's just the principle of prescription is always going to be bad, and we have lots of evidence. We've actually experienced it in this country because you're forcing investment, and that leads to suboptimal outcomes.
Do you think when you dissect this notion there are sinister motives, or is this just a genuine concern about economic growth?
I think people just see easy money. If you've got big debts and you're struggling to get people to take them on, well, let's just go and force investors like pension funds to go put money into those investments, and then we've solved the issue, haven't we? But the issue is that the assets in pension funds actually belong to members. So it's not as if there's just this blank wall where you're getting money. A lot of funds in South Africa define contribution funds. So it's actually your and my money that's going there for me to save for retirement. If you make me invest in a suboptimal asset class, I'm going to be poorer when I get to retirement. Nothing's been solved. Whereas if you find positive investment opportunities, you can actually get better returns than you can on the average assets.
Okay, so this boils down to political noise, especially when there's talk of quantitative easing and prescribed assets instead of impact investing. Let's talk about the investors, the mindset and the modus operandi in as far as political noise and how it plays out in the news and how frequency data plays out. Give us a scenario where does it really matter when there is a tweet or a press conference that addresses some of the issues which are really making the markets jittery?
Anytime you get some market news, the markets move. Markets are very sensitive. So we have to try and keep remembering that most of us should be very long-term investors. So a tweet today that causes a market jitter should not make a difference on where I want to be in 10 years if I'm making a good long-term investment. But the reality is that all creates uncertainty. So people start looking at the tweets and trying to see direction. And then they start saying, if prescription's on its way, then I'm going to, what can I do to protect my assets, prevent this from happening? Yeah. Maybe I should reduce my contribution to my retirement fund as far as I can and go invest elsewhere. So tweets are not necessarily long-term, they can be reversed, but they can cause people to make wrong decisions.
But that's actually startling because that's not official government policy communication. It's just a tweet.
But people get nervous. And obviously you want to be ahead of the game. So if there are going to be dramatic changes through the introduction of something like prescribed assets, You want to have tried to decide what's the best thing for you in advance and done it, because then you get a better price for your assets than everyone else now has to follow when it's common market knowledge.
So one will ask, why does it really matter for a long-haul investor to worry about fluctuations, political noise, and also the effect or impact on short-term investing?
It shouldn't make a difference, but unfortunately sometimes people make stupid decisions based on short-term noise. I mean, the worst you can do is if you hear something negative, you take a big decision like I must go out of equities into cash. Short term, the equities went down. The next day, they doubled in value or whatever it is. You've lost out. So be wary of tweets. It sounds like it shouldn't make a difference if you're investing for 10 years. But if you make the wrong decision at the wrong time, it can have a significant impact.
When you speak to an investor who has to sleep at night and not worry about market fluctuations, when you have prudent investment intentions, why should it matter when there's a debate? Because debates should be healthy in a democracy where people disagree to agree. So why not let the investment space to operate the way it operates, which is prudently, and allow debates that may decide on whether or not the notion of prescribed investing must be looked into? Because if investors are going to be wary of that, it means that there is really this borderline attitude that should anything be said about this, then we will disinvest.
Yeah, I think you also have to understand, so often it's decisions are being made on your behalf. So you have a fiduciary that represents you, for example, a trustee on a trustee board. So they have to be trying to be responsible for you in the long term. So, I mean, obviously they're not going to suddenly take all your money and put it into cash. They'll try and make sure that you can't do that. They definitely won't. But they're trying to look for the signals. And obviously comments about prescribed assets create uncertainty, and fiduciaries start saying, what should I be doing on behalf of my members? So obviously we get a lot of questions, and it's sort of what are we trying to do as an industry, as a group of investors, to have some solid, sane conversations about what is the right thing to do. So it is, let's avoid the short-term noise, but also how do we seize the conversation and make sure that we don't end up with bad things being forced onto us sometime in the future just because fiduciaries didn't speak up, and make sure they were advocating for the right thing to be done.
Right. Thank you very much for making time to speak to us.
My pleasure.
Well, of course, this subject is very complicated, but of course we'll try to simplify it as days go on, as we are expecting professionals and investors together under one roof to thresh out the notion of launching an investigation into prescribed assets. And of course, we are speaking here to Janinia Slwasky, who is a principal investment consultant at Alexander Forbes. Let's take a break.